Esse vídeo está chegando até você graças aos apoiadores do canal. Considere apoiar nosso projeto no Patreon ou no Padrim. Os links estão na descrição do vídeo e no comentário fixado.
A crazy idea on Reddit turned into a way to stick it to Wall Street. But who will come out on top? Welcome to America Uncovered. I'm Chris Chappell. Let's talk about stonks. But first, please remember to like this episode and subscribe to America Uncovered if you haven't already. Look, I'm no Louis Rukeyser, but I think it's fair to say that this past week was a roller coaster of crazy on Wall Street. A weird, wild, and hilarious ride for everyone. Everyone except hedge fund managers. They ate too much cotton candy and are about to hurl. It all started with everyone's favorite brick and mortar video game retailer, GameStop. Okay, it's pretty much the only brick and mortar video game retailer. Back in 2019, it looked like GameStop wasn't doing so well. Some people were predicting it would go out of business, and a lot of hedge funds were short selling GameStop. Short selling is essentially betting against a company. Short sellers borrow the stock of a company, sell it, and plan to buy it back again when the price goes down. They make money off the difference in price. It works like this. Let's say that I have a banana, which is worth $2. Shelley borrows the banana from me, promising to return it later with interest. She sells the banana to Matt for $2. Then, she waits until the price of banana goes down to $1, buys the banana back from Matt, and then gives it back to me with interest. Shelley just shorted the banana. She and I both made money, and everyone wins, except for Matt and the banana, which is probably mushy at this point. Large-scale shorting of a stock tends to drive the stock price down. That's what happened to GameStop. So many hedge funds were shorting GameStop stock that they ended up shorting more shares than actually existed. How is that possible? Wall Street magic. Here's how it works. Shelley borrows a banana from me and sells it to Matt. Then Seamus borrows the banana from Matt and sells it back to me. Now, Shelley and Seamus owe a total of 2 bananas, even though there's actually only 1 banana. I know, the whole thing's bananas. But the point is that hedge funds were successfully shorting GameStop. The company's stock was going down, and all was working out as planned. Until the internet showed up. Specifically, a subreddit called r/Wall Street Bets. They describe themselves as, like 4chan found a Bloomberg terminal illness. You gotta give them credit for self-awareness at least. Wall Street Bets is a pretty crazy subreddit with its own unique culture. But back in September 2019, a member of Wall Street Bets posted this chart. It showed that since June 2019, this Redditor had spent more than $50,000 on options for GameStop shares. Stock options are when you pay a certain amount of money now for the option to buy shares of a stock at a later date for a fixed price. In this case, he had spent the $50,000 on the option to buy shares of GameStop on January 15th, 2021 for $8 a share. Now, when he bought the options, GameStop was trading at between $3 and $5 a share. And remember, analysts were saying it was going to go out of business. So paying that much money for the option to buy GameStop shares in a year and a half for almost twice their value at the time could seem crazy. But when he posted that chart in September 2019, the value of his investment had already doubled. That's because you can trade options just like you can trade stocks. And option prices had gone up. Why? Because Wall Street investor Michael Burry said he was going long on GameStop. Burry said that GameStop was in a good financial position, and his firm, Scion Asset Management, bought 3 million shares. Michael Burry is of course famous for being played by Christian Bale in The Big Short. And, for being the guy who predicted the subprime mortgage crisis that crashed the financial markets in 2007 and 8. Things would remain pretty rocky for GameStop for most of 2020. But every month, the Wall Street Bets guy would keep buying GameStop options and posting his results. He also started live streaming under the name Roaring Kitty. Here he is in August 2020 explaining his bullish position on GameStop.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that. That's why it's the top position in my portfolio and also Dr. Mike Burry's portfolio. The combination of positive fundamental developments, a potentially massively bullish chart, and an exorbitant short interest suggests to me that an upward move could be explosive. Maybe. What the hell do we know?
By the end of 2020, his GameStop investments were worth more than $3 million. And that was only the beginning of the wild ride to come. So stick with me after the break. Welcome back. Over the last few weeks, more and more people on Wall Street Bets, as well as other individual investors, have been buying GameStop shares, which has been driving the price of GameStop up astronomically. The stock peaked this week at more than $480 a share. Of course, the people doing this aren't just individual investors, known as retail investors. Larger, institutional investors are also getting involved, for a lot of reasons that I'm not going to get into here because this is not Stonks Unsold.
Welcome to Stonks Unsold. I am your host, Stonk McStonkerface.
Someday, I'll be replaced by that guy. Anyway, so with this astronomical rise in price, what happened to the hedge funds that were shorting GameStop? Well, when the stock price started to rise, they tried to short the stock even more in order to keep the price down. But when that didn't work, they started to get trapped in what's called a short squeeze. A short squeeze is when investors who have a short position are forced to buy back the stock at a higher price than they sold it for in order to return the stocks they borrowed. For example, if Shelley borrowed a banana from me and then sold it to Matt for $2, but then the price of banana suddenly went up to $480, Shelley still has to buy the banana back from Matt so she can give it back to me before the price goes up even more. This is called covering your position. In this case, Matt wins big and Shelley loses big. And the ironic thing is that in order to cover their position, hedge funds have to buy the stock they're shorting, which drives up the price of the stock even more. That encourages more people to buy the stock. And that makes things worse for the other hedge funds who haven't covered their positions yet. Yeah, that's why it's called a short squeeze. One of the most prominent hedge funds to get short squeezed is Melvin Capital. They got squeezed so badly, they had to be bailed out by two other hedge funds, Citadel and Point72, who injected $2.75 billion into Melvin Capital. It's nice to know that when times get tough, hedge funds are there to help each other. That is, when they're not trying to short squeeze each other. But in this case, the cash injection allowed Melvin Capital to buy enough GameStop shares to close out of their short position. Whew. At least that hedge fund is safe. Since GameStop shares have skyrocketed, there have been concerns over whether Reddit is manipulating the stock market. Some people have called it a crowdsourced pump and dump scheme. That's when people artificially pump up a stock by buying shares and spreading rumors about it, then dump the stock when the price goes up, leaving other investors holding the bag. But market manipulation has historically been a difficult offense to prove, because it can require showing that perpetrators spread false information and intended to rig prices. Some investors, though, said the trading talked about in Reddit's Wall Street Bets forum isn't manipulative, and reflects an earnest effort by individual investors to seize on opportunities that have always been available to establishment players. And these opportunities have only really been available to your average Joe fairly recently. A brokerage called Robinhood basically changed the retail investing industry by offering no-fee stock trading. Before, you would have to pay a commission fee on every trade. For a gigantic hedge fund, a few dollars a trade isn't a big deal. For your average Joe, that's a lot. But once Robinhood offered no-fee trading, so did several other big brokerages. And brokerages also began offering the average Joe the ability to trade more complex things, like stock options, which I talked about earlier. Robinhood, in particular, built their image around bringing investing to the little guy.
Remember when greed was good? When you had to look the part? When you had to pay for a seat at the table? We set out to change it, the way the system works, to put the power in everyone's hands, to make it feel, speak, sound, and look just like you. We all invest every day in ourselves, our communities, our future. We are all investors.
Yeah, we're all investors. Power to the people. Until the people use that power to buy too many seats at the table, and then we obviously have to stop them. It's just the way the system works. After GameStop shares hit a record high, Robinhood stopped trading on GameStop and other skyrocketing stocks like AMC. Well, technically, they still let people sell these stocks, but they didn't let people buy them anymore. And after the stock prices began to fall, some investors said Robinhood even sold the stock for them even if they didn't want that. Robinhood has denied those claims. Robinhood wasn't alone in restricting purchases of GameStop and other stocks. Other brokerages like TD Ameritrade and Charles Schwab did the same thing. But they didn't build their mission around democratizing finance for all, like Robinhood, which is why people started saying that Robinhood had turned into Prince John. After these brokerages restricted trading, GameStop shares went down. Even though your average investor was restricted, big investors, like hedge funds, could still buy shares. And they may have been driving the price down so more funds could close out their short positions. According to Robinhood, the reason they had to restrict trading was not because they were pressured to by Wall Street. It's because they didn't have enough money to cover their financial requirements, including SEC net capital obligations and clearinghouse deposits. And that's certainly a legit reason. According to reports, Robinhood has now raised an extra $1 billion of funding from investors, and it started to allow limited trading of GameStop and other stocks. But when you start looking into Robinhood's business model, that's when it gets interesting. I'll show you how they really make money after the break. Welcome back. Robinhood. They're the brokerage for the people. They don't even charge you money to trade. So how do they make a profit? By selling their users stock trades. Robinhood sells the trades through what's known as payment for order flow. They sell them to companies called market makers. You see, Robinhood doesn't actually buy and sell the stocks. The market makers do. They pay Robinhood because the market makers can make money for themselves when they actually do the trade. Those firms make money by effectively seeing what the retail investors on Robinhood are going to do before they actually do it, and act accordingly. Robinhood's biggest market maker is a company called Citadel Securities. If that name sounds familiar, it's because Citadel is also a hedge fund. In fact, it's one of the funds that bailed out Melvin Capital. So Robinhood gets hundreds of millions of dollars from a hedge fund that is now directly involved in the GameStop situation. So maybe Robin Hood isn't Prince John after all. Robin Hood is the Sheriff of Nottingham, and the hedge funds are Prince John. Speaking of Citadel, fun side note, U.S. Treasury Secretary Janet Yellen has gotten over $800,000 of speaking fees from Citadel. But the situation with Robinhood and Citadel, and how they make money off ordinary investors' trades, is a great example of the stock market that's on top of the stock market. Ordinary retail investors think of the stock market as a place where you buy and sell shares of companies. But there's a whole other world of ways that these investment firms and brokerages and hedge funds make money from investing your money that you don't even know about. Here's another example. When I talked about short sellers, I mentioned that they had to borrow stocks from investors to short sell them. Well, who are they borrowing the stocks from? In some cases, you. And you might not even realize it. When you open certain types of brokerage accounts, like margin accounts, you sign what's called a hypothecation agreement, or sometimes a loan consent agreement. You basically agree that the brokerage can loan out your stocks without telling you, and they get to keep the interest. It's a win-win for your brokerage and the short seller, not for you. This stock market on top of a stock market type of money making is basically what caused the 2008 financial crisis. And that directly affects what's happening with the GameStop situation. I'll explain after this final commercial break. Welcome back. A lot of people were personally devastated by the 2008 financial crash, and they haven't forgotten. That's why a big part of what's driving this GameStop rally isn't greed or doing it for the lulz. It's about raging against the financial machine. People investing today are driven by righteous anger about generational injustice, about what they see as the corruption and unfairness of the way banks were bailed out in 2008 without having to pay legal penalties later, and about lacerating poverty and inequality. This thread on Wall Street Bets is full of people talking about how the 2008 financial crash destroyed their lives, and how now they're determined to hold their GameStop stocks to teach Wall Street a lesson. It's become a populist movement, an actually semi-effective Occupy Wall Street, and people are rallying behind it. I mean, even Ted Cruz fully agrees with AOC. When do you see that happen? It even brought former Daily Show host Jon Stewart out of retirement to post his first tweet. It's a classic underdog story. The little guys beating Wall Street at their own game. And for many, the whole Robin Hood part of this saga proves that anytime the little guy wins, the system comes right back to keep them down. So what happens now? Well, as of when we recorded this episode on Friday, GameStop was still over $300 a share. There have been concerns that this could cause a ripple effect through the stock market, as hedge funds have to sell other stocks to cover their losses on GameStop. But don't worry, because they're probably too big to fail. If things get really bad, the government will always be there to bail them out. And hey, investment firms are the big winners here. Meanwhile, Robinhood users have filed a class action lawsuit against the company for restricting trades. Wall Street believes that the price of GameStop will go down soon, although it looks like the short sellers are still not surrendering, despite losing $20 billion. One billionaire hedge fund manager called the Robinhood market a loser game, played by people who don't have any idea what they're doing. And it's definitely true that a lot of retail investors could lose a lot of money when the stocks start to fall. But the losers on Wall Street Bets seem to be determined to keep holding on to their stocks, including Roaring Kitty. As George Carlin would say, it's a big club, and Wall Street Bets ain't in it. which means there's only one solution. Join the club by establishing a Reddit hedge fund. I, for one, look forward to investing in Hold Meme Stonk's investment management capital. I'm sure they don't have any idea what they're doing. So what do you think of Reddit versus Wall Street? Have you invested in GameStop? Let me know in the comments below. Episodes like this one are pretty research intensive, so if you can, we appreciate your support on patreon.com/America Uncovered. Thanks for watching.
Olá pessoal, tudo bem? Aqui é o tradutor. É graças a essas pessoas incríveis que eu posso estar trazendo conteúdo pra vocês. O Warlei, a Sandra, a Majestade, o Thiago, o Antônio, o Arthur, o Carlo, a Erika, o Rubens, o Caio, o Flávio, o Gustavo, o Vunho, a Spanish.vaz, o Eduardo, a Renata, o João, o Henrique, o Leonardo, a Iracema, o Eduardo Maluf, o Anderson, o Daniel, o Morandi, a Atena, o Berg, o Bruno, o César, a Erika Santos, a Fabiana, a Fernanda, a Josiane, a Kátia, a Maria Margarete, o Warlei, a Sandra Paula, o William, a Cláudia, a Rogéria, o Dourado, o Marcelo, o Wesley e o grande Pablo. E é isso aí pessoal, não se esqueçam de deixar seu like, seu comentário e até mais. Fui! Grande abraço.